Wonderful good day, ladies and gentlemen, and we are still in Zurich here at the Denver Gold Forum, and it's a very large pleasure and honor for me. I have now here Sean Boyd, the President and CEO of Agnico-Eagle Mines. Sean, thank you very much for taking the time.
Very good to be here.
Great. Yeah, of course, the last weeks and months have been very busy for you. And of course, I think our viewers, first of all, want to know a little bit about the Osisko takeover. What made you to do that? Of course, there are a lot of rationales and reasons behind it. Can you elaborate a bit on that,
Sure.
please?
We've been operating in that region for almost 5 decades. So we would consider that part of the world our backyard. We've got 3 producing assets that stretch along Highway 117, 50 kilometers, 2,000 employees, our regional logistical support office, our technical service group, and right in the middle of that is Osisko's Canadian Malartic mine, the biggest mine in Canada. So when Goldcorp made a hostile bid, it was something we had to look at. It makes good sense. It's generating free cash flow. We've got skills in the area that can help optimize it, and there's still a lot of upside there.
Can you use also a lot of synergies then?
There are synergies in terms of our technical skill set and in terms of next stages. What do we do? Are there additional expansion opportunities? The package also comes with some exploration properties in Ontario, which are about 100 kilometers to the west. We think there's a buildable mine there, so we're going to be focused on expanding the drill program there. It's an area we also know quite well.
Oh, yeah, that's excellent. The shareholders' vote is, I think, by the end of this month.
The
right?
Osisko shareholders will vote on that on May the 30th, and assuming the vote is positive, which we believe it will be, then it goes before a Canadian court. It's a plan of arrangement, and we expect to see that approval by the second week of June.
Fantastic. You are paying now in the 32nd consecutive year, I think, dividends.
Dividend's been a big part of our history.
Yeah.
Agnico's been around since 1957, so we've always focused on return, and the dividend's been a big part of our history. And the gold business has been tough. We've seen volatile gold prices over that 32-year period. And even when things were difficult, we always managed to pay a dividend to our shareholders.
And this will stay, of course, even if you take over Osisko.
Absolutely. In fact, when you look at Osisko and the Canadian Malartic mine, it's actually generating net free cash flow. So our financial flexibility actually improves with the Canadian Malartic asset.
So this sounds to me a little bit that maybe you can raise the dividend in the future through the deal.
Well, you know, the dividend in 32 years has gone up and down.
Exactly.
All depends on conditions.
Yes.
Gold price is a big determinant of that. So we're inclined to pay a dividend. A lot of our competitors up until recently thought a dividend wasn't important, but we always believed that it was important to generate that return and have the discipline year in and year out to find the room to pay it. So it's important to us. So we'd love to increase it. The gold price is a big driver of that.
Yeah, as we are in a, I wouldn't say horrible, but in a weak environment of gold prices, also silver prices, also copper, around the $3 per pound. How do you see your financial statement from the first quarter, and what is your projection for 2014 for the company?
Well, first quarter was a great quarter. We set a record in terms of production. Our cost performance was very good. We generated almost $250 million in operating cash flow. We began to pay down some of our borrowings on our credit line, so we're in a very strong financial position. As a result, we can borrow additional funds from our credit line to help with the Osisko transaction. So we're in a really strong position. We've got production growth from existing assets. We're going to see about 16% growth in production before adding anything from Osisko over the next 3 years from our mines. So a solid business that's working well, generating net free cash flow. So we do have that financial flexibility to weather the volatile nature of the gold business.
And a little bit of an outlook for 2014? What can you estimate? And also especially, what is your view on the gold price?
Well, in terms of our operations, we've already said in our first quarter release that we expect to exceed the upper end of our production guidance range. We expect to do better than the lower end of our cash cost guidance. We'll update the market late in July when we put out our second quarter numbers. As far as the gold price right now is really based on sentiment. A lot of the sentiment is around the U.S. and quantitative easing and tapering. That seems to put a bit of a negative spin around gold. But that's not the market. The market is in the Far East. There's big demand over there. Central banks will continue to buy. That's what's ultimately going to set the price. And mine supply is not going to grow. The mining business is tough. There's a lot of big projects that have been put on hold. Exploration budgets have been slashed. That impacts production down the road. So we're positive on the gold price, but we're fortunate we've built a business that's lasted for over 5 decades through the ups and downs, and we can withstand any gold price environment.
Let's talk about the all-in costs in all of your operations, all your mines. Yeah, because you're operating on 4 continents, if I'm right, with 5 mines, right?
We've got 8 mines now.
Oh, 8 mines now.
Yep.
Sorry.
Yep.
Yeah. Where do you see the average of the all-in cost? And I mean really the all-in cost. As I read something about an cost comparison of that, the largest gold producers in Northern America are around $1,200.
Well, there's several definitions. Cash cost for us in the quarter, that's cash cost to extract an ounce of gold, was in the low 500s. Our all-in sustaining costs, which includes the capital to sustain operations, was around $800. But our all-in, when you throw in interest and administration, would be in the neighborhood of $1,150 to $1,200. So it shows you that it's still a difficult business even at $1,300. If you look at the quarterly earnings that came out from a bunch of the gold producers in the last few weeks, even at $1,300, companies are earning 1 cent, 3 cents, 4 cents. We had an excellent quarter. Our earnings were over 60 cents. So that was a record. We'll see good production going forward. So we have a business that can generate good earnings even in a $1,300 gold price environment.
And even this creates a lot of upside if gold should go back to the 1,500 to 1,600, of course.
Great leverage, growing
leverage.
Production, a business we can manage. I think that's one of the key issues. As this industry grew over the last 10 years, it grew too fast. Companies created businesses that are too hard to manage right now in this environment. Some companies are having to pull back, sell assets, get to the point where they can manage the business. The nice thing about our mines, is that we have 8 producing assets. We've got 3 within 50 kilometers of each other in Quebec. We've got 3 within 70 kilometers of each other in Mexico. So we've got a business we can run, a business that we can execute on, and we've been able to deliver quarter after quarter over the last 2+ years.
Are there any plans that you may expand, let's say, down to Africa?
No, that's not a part of the world where we've got the skills to do business. We've been very measured over 5 decades, and we've managed the political risks very carefully. Mining's tough enough. We tend to stay away from those parts of the world where people tend not to want you to be. Parts of the world where we go, where there's pro-mining, people want you to make investments. It's just easier to manage the business.
Excellent. Sean, thank you very much. All the best for that, and all the best for the takeover, of course. And that the integration goes very well with Osisko.
Thank you very much.
Thank you. Ladies and gentlemen, it was Sean White, the President and CEO of Agnico-Eagle. Yeah, and you heard it. 8 mines now in 4 continents, and Osisko takeover is going well. We will see by the end of the month with the decision of the shareholders of Osisko. And I think I'm quite confident that they will integrate this company very well as they did it since 1957, and hopefully rising dividends for the future. Thanks, and bye-bye from Zurich.